I am at XP Power. I've been following their results, their interims and their full-term results, which we're covering today for several years. Joining me is Chief Executive Duncan Penny. Hi, Duncan. And also the money man, the Financial Director, Jonathan Rhodes. Now, I have to say that I come along as a journalist each year thinking I can give you a tough time because of revenue and trading figures. But I've seen your January statement, Jonathan. General trading, good again.
Yes, we ended up with a really strong year, 133.5 million in orders. That was up 21% on the previous year. We ended up with revenue of £129.8 million, and a lot of that momentum was in the back half of last year, particularly in the final quarter. So there's a lot of good backlog on the business and a lot of momentum into January this year as well. So all in all, going very, very strongly.
And just before I go to Duncan, there's always people out there thinking, what's my dividend going to be? Can you mention the dividend?
Dividend's up again 8%. Yeah, we're proposing a final dividend of 26p, which would make the total year dividend 71 pence. So that's up 8%, as I say.
Duncan, those are the figures. What's the reality behind it? And maybe you could deal with the different sectors that XP covers here as well.
I mean, actually, we seem to be firing on all cylinders at the moment. Each geography was up year on year. Each sector was up year on year. Industrial was up 23%. We've seen a really good recovery. You may recall that industrial in 2015 had a bit of a downturn in the US, and that's come back. Technology's up 19% year on year. Semiconductor manufacturing companies are in that sector, and they did really well. In dollar terms, they were up 33% year on year. So semi-fab for us is over $20 million in 2016, and that represents about 12% of our overall revenue. Healthcare grew 10% year on year, so when you normalise that for the currency, that was probably the lowest growth sector, but it grew in absolute terms.
There must be some difficulties you can talk about. Talk to me about any challenges
Yeah,
you've got.
Well, the challenge I think we're going to get into shortly is really managing the manufacturing capacity. So we've had a really strong end to 2016. We started the year very, very strongly. So now we're in the position where we've got to actually build that product. So that will put more strain on manufacturing. But I think we're in the best place we've ever been in terms to manage the uptick in that demand. We've been introducing lean manufacturing technology there. So we're actually have a much more agile manufacturing situation. Even when things are going well, there's always challenging. We're trying to get more products out the door, trying to expand our product portfolio. And the challenges of managing growth. So it's never easy whether the business is going backwards or going forwards.
Now, when you look at geographical areas, there are challenges there. We'll come to more detail on the different countries you operate in. But Trump in the USA, Jonathan, closer to home, and the thing that keeps people like you awake at night is surely Brexit, with all the implications and the uncertainty that causes.
Yeah, I mean, there is a currency effect after the Brexit vote when sterling weakened against the dollar. And a lot of our cost of sales are in dollars. So that has an impact on our margins. But we have managed to push up the prices to our customers. They're not very pleased with that, but they do understand the reasons because it's happening across all sorts of industries. But we have been hurt on the margin in the latter half of last year because those price increases won't take effect until the beginning of this year. But that said, our second half orders as a group are 18% up on the first half of last year. And that's exactly the same for the UK. So we're not really seeing any customers going away, which is quite encouraging.
Let's have a bit of a first in these interviews. We've got some product in front of us. We always like to look at product. What is it? Why is it interesting?
Yeah, so it's quite nice to bring the applications that we get designed into to life. This is a smart meter repeater station. The customer actually provides smart meters, but in each home, this goes on a post outside and it speaks to all the houses in the vicinity and collects all the data wirelessly. They needed a power supply to go into this device. It's a nasty environment for a power supply. It's outside, so during the day it's going to get very, very hot. Heat is always an issue with electronic systems, particularly power supplies. Also, it's going to get very, very cold in the winter, so it's got to start up properly. So this is what we came up with. It's a custom design, and we designed a power supply to actually fit exactly in the space. And you can see it's got a very, very low profile transformer, very unusual design, very rugged. And we gave them, from speaking to them to actually delivering them the first prototype, was around 6 weeks, which is a pretty impressive performance. We're just starting to deliver now the pre-production units, and this will go into production in very early in 2018, and it's probably about $400,000 to $500,000 program a year. So a nice program. And quite an interesting application.
And Jonathan, that brings us nicely into manufacturing in general. Talk to me about manufacturing from your perspective. We had some interest around the capacities in Vietnam when we last spoke.
Yes, so we've been transferring product from the factory in China and doing the power converters in Vietnam. The factory's been there since 2012 doing the magnetics, but since the beginning of 2015, we've been ramping up the power converters. And in fact, last year they did more than twice as many as 2015. So in terms of capacity, we're now at about 70% in China, 50% in Vietnam. And we're going to need to start breaking ground on the new facility in Vietnam, for which we have the space, the land space. And we've put in 1.5 million of capex this year to break ground on that in Q4. That should be up and running in beginning of 2019, and it's probably going to cost around $6 million, we estimate.
So against all this background, positive background, any changes in strategy?
We spent some time in April with the management team critically reviewing our strategy. The strategy we've been following for a number of years, and it's served us really well in terms of eating up market share from our competition and growing the revenues and profits. But we did make some small refinements. We were looking at our product portfolio. We had a sort of a strategy that we'd develop a broad leading edge portfolio of products. And what we found is some of them are a bit too leading edge and a bit too nichey. So the new products that we're developing are more mainstream, broader. And what we find is most of what we do is actually customized or modified somehow. So we'll lead with the standard product. So we're trying to make the product portfolio a bit broader and more appealing. In terms of the customers, we had the key account strategy. We still have that, but we've tweaked that very slightly. So we're actually targeting accounts where we can really add value. So some of those may not necessarily be the big blue chips that we've broken into. We find that some of the customers just below that, they're more innovative, they're growing quicker, and particularly they move faster, they design the product in quicker. So we're getting a lot of our growth from the tier below that. So we're being a little bit more selective in terms of the customers. But we're also finding that we can vertically penetrate those customers. So we want more products to sell to our existing customers. We don't need a lot of new customers. We want a bigger share of the wallet of the customers that we've got. We dropped a few things. We wanted to become a manufacturer. Well, we de facto are a manufacturer today. We also had a strategy point saying that we wanted to increase the amount of own design, own manufactured product that we have up to 75%. Well, we were at 73% last year, and we're going to break through that this year. So we've dropped that as a strategy point. De facto, we are a manufacturer, we are a designer. The other thing we did is we added operational excellence as a key strategy point as well, trying to get more value from our organisation, actually targeting the customers where we can add value, making sure we provide excellent service, the ultimate experience for our customers, good delivery, good quality and good after-sales support. So we're focusing there. Then finally, we've added acquisitions as a key tenet to our strategy as well. We did the acquisition of Emco at the end of 2015, went very, very well. It's done very well for us this year. We've got a good, strong balance sheet, and I think if we can find acquisitions that give us broader product offering, we can put that through our sales channel and drive really good synergies.
Okay, well that's where we are now. We always finish these chats with putting our crystal ball on the table. It looks a bit like a crystal ball anyway, and looking ahead. Jonathan, you might want to just pick up on Emco there. This guy's always going to say an acquisition like that's good. From the money point of view, has it been a success? And where does XP stand regarding this year and perhaps beyond?
Yeah, Emco's done very well for us. It's grown very nicely this year, and it looks like it's going to grow again next year. We're very pleased with that. We've wrapped it up into the business now. We moved from a net debt position at the end of 15 of 3.7 million to a net cash position of 3.7 million.
I saw that in your statement. Where's all that dosh come from?
Profits.
Profits, and we don't have to spend too much on capital. We are obviously going to spend a bit more this year with Vietnam. So with our strong balance sheet, we can leverage off that if there are any acquisitions coming up. In a very good position, basically, while still progressing the dividend. And
Duncan, finally from you, there seems to be a hint of acquisition here. You've got that. You've got the wallet. He's giving you the money. You're going out there on the market. I mean, I know you're restricted on what you can say to us, but it seems as though you're looking for the right fit.
Absolutely. I mean, we've been very open to our investor base that we are looking for, acquisitions that we can add on to the group, which would add value. But we're looking for ones that can generate good synergies. And as I said, the right products, good engineering capabilities, expand our product portfolio, expands our available market. We've already got a great sales channel, so I don't think we'll look for something that expands our sales channel, but a company that's got, as I said, custom power, high power, that would be a great fit for us.
Okay, watch this space. We'll be back in hopefully 6 months' time with the interim results. Duncan Penny, Chief Executive, Jonathan Rhodes, Financial Director here at XP Power. Thank you very much for joining us.
Thanks,
That's
Nick.
all. Thank you.